All right. Hello and welcome to today's Mini Masterclass Live. It is Mini Masterclass Thursday, but on a Wednesday. We are letting everyone join and give everybody a few minutes. I know our link went out a little bit late. Hi, Pete.
Hi
Thanks for
there.
joining us.
Thank you.
Hey, familiar faces. So anyway, we are doing mini masterclass on a Wednesday instead of a Thursday. Normally we do it on Thursday, but I'm teaching tomorrow, so I won't be here for the class. Welcome, Sage. People are joining. Love it. All right, so we have a lot to cover today. I will just jump in. And please feel free to ask questions. This is being recorded. We will post it on our YouTube channel, so I wouldn't ask anything that's maybe too information sensitive. We can definitely take those types of questions offline, but any questions you have that are generic, be great to ask if you have them as they come up. So we're going to talk first about the mileage update. So this year, the federal government has updated the mileage rate to 72.5 cents per mile. So it is amongst one of the largest write-offs. It really adds up when you use this deduction. There are several things that you have to know about using the deduction. So first and foremost, if you're a sole proprietor or a single member LLC, you can use the deduction just like normal. Any business miles that you drive are 72.5 cents per mile. If you are an S Corp, you will need to have your accountable plan intact so that you can put in it the basis in which you can the business reimburses you for things like mileage and home office expenses, which is what we're going to talk about today. So make sure if you are an S Corp that you have all of your compliance documents in order, which is your reasonable compensation analysis, as well as your accountable plan. In addition to business miles, you also have other mileage you can take advantage of. And I think very rarely do people know this ahead of time. They might find out during tax time and then it's kind of too late to go backwards. So I want to make sure that you realize you also can deduct 20.5 cents per mile on medical mileage. So if you're having some medical issues and you have to go to your doctor's appointments or you have to travel to a facility that can help you, you can actually write off those miles as well, even though they're not business miles at 20.5 cents per mile. So it's great to track these things up front rather than find out later and go, oh crap, I wish I would have known. If you are driving to and from charitable organizations or volunteer time, you can write off 14 cents per mile on those, again, even though it's not business related. And you would want to track these separately and not claim them as business miles, but you can be prepared with your to your tax preparer at the end of the year with these other mileages. And then if you also happen to be military and you are moving from one location to another, you can write off 20.5% cents per mile as well. So there's lots of different mileages. The main one is the business mileage, which is 72.5 cents per mile. The thing on this is if you have a business office, so one place that you go every day to the office, your mileage to and from that office is not considered deductible. Just mileage from the office to your client's location, to the bank, to the post office, to a meeting with somebody, but not to and from the actual office. So when you're recording your mileage, the easiest way for me is I track it on my phone. I have QuickBooks Online, has a mileage tracker. You can turn it on, and then through your app, it's always on in the background. You don't have to stop and start your trips. You don't have to remember to go into the app. You're just simply going to swipe if it's business and swipe another way if it's personal. You can actually set up trips in there where if it's your trip to and from the office every day, you can just say office trip and it'll know it's not deductible. And whereas all day long, you can be going other places that are deductible. So I highly suggest using and taking advantage of the mileage deduction. If you're a sole proprietor, single member LLC, not taking the S Corp election, just write off any mileage, no problem. That's business mileage or those other ones. If you're an S Corp, you need to have that accountable plan in place so that your business can reimburse you for that business mileage as an officer owner. This only applies to the officer owners. Employees do not get that, other employees, because you are an employee of your business. But if you're the officer, you can take the mileage deduction if you have it in your accountable plan. We'll talk a little bit more about compliance and the accountable plan a little bit here, but now we're going to get into home office deductions. I see every year financial statements that don't include home office expenses on them, which means you are missing deductions most of the time. Sometimes a tax preparer will take that separately, will ask for it separately. Not everyone does, and there is some diligence that's required in the record keeping of these home office expenses, which why a lot of them don't, because they don't want to take the time. If you don't just present the information, they're not going to take the time, even though they should. And we all agree on that. It just doesn't happen. So home office deductions. If you're, again, sole proprietor or single member LLC, you can simply go into your chart of accounts. There is actually a home office area in other expenses. So it has to be in an other, named an other expense in your chart of accounts. That will put these expenses at the very bottom of your P&L instead of mixed up in the middle. There's a very specific reason for that. And it's because the middle part, so if you think of a P&L, it's all of your income on top, then all of your expenses in the middle, and then other income and other expenses on the bottom. All of the expenses in the middle are to be normal and ordinary expenses of your business. The other expenses are things you happen to spend your money on, but aren't really that integral to you running your business. They are not normal and ordinary. For example, your home office. If you have a regular office and you didn't have your home office, you could still run your business just fine. If you're a remote company, your home office is necessary, but that is also, it's still considered an other expense because you could go get a regular office and still run your business. So we're going to talk about chart of accounts in QuickBooks. If you're using another software or you're chiming in from other platforms, this is something is going to be very similar to this. So in your chart of accounts, you pick other expense, you'll find a whole bunch of home office specific accounts that you can pick, from utilities to rent to interest to insurance to the mileage is also an other expense. We didn't talk about recording your mileage, but if you're in QuickBooks Online, it does it for you. It does not report to somewhere on your financials. It just produces a report for you to hand to your tax preparer and say, here's all my mileage. And it shows you your deduction racking up, but you're not going to see it anywhere on your financials. So whatever your bottom line is, doesn't include the mileage write-off. So if your mileage write-off is 10,000 and your bottom line says you're profiting 30,000, you already are down to 20,000 with the mileage in that scenario. I'm sorry, I have my notes right here to make sure I don't miss anything. So we set those up first. Now, here's some very specific rules around your home office deductions. Your home office has to be strictly used for business, primarily used for business. It can't be a table in the corner of a bedroom that you have a lamp on that you sometimes sit at with your computer. It has to be somewhere that is designated for the business. Who's going to know? Who's going to look? You're taking that chance. I can't answer that. I've never once had an auditor come in and look at someone's house to see if this is correct. But if it doesn't look reasonable, you're just giving the IRS permission to look deeper, look further, and you're asking for questions, which could lead obviously to audits. And yes, they do have the right to come to your home and look at the home office deduction expenses. Never seen it happen, but technically they do have that right. So we want to be reasonable about it. The way you determine a home office expense is you take the room that is the primary purpose is business, and you figure out its square footage in comparison to the entire home. So I'm going to use very round numbers. If your home is 1,000 square feet, and that room is 100 square feet, your home office deduction rate is 10%. So you have to start there. You have to have that calculation. It's would be great if you have like a graph of your house where you can see that information, or you can detail that information out and just that put a pin in it. That's how I prove that my house deduction, my home office deduction is accurate. Now you can take that amount of percentage off of all these things. And they are your rent, if you're a renter, your interest, if you're a homeowner. So you're not going to deduct your mortgage 10%. You're going to deduct the interest that you're paying on your mortgage 10%. However, the remaining 90% might be something you can write off on your personal taxes. So do keep that information handy, because you might be able to then get the 100% write-off between business and personal. You can write off that percentage of your utilities, your electric, water, sewer, any utilities of the home can also be written off that same percentage of the 10% in this example. Your internet, 10%. You cannot write off 100% of your internet if it's for the whole house. So you still, I have seen people try to do that as well as their cell phone. We're going to get to cell phones in a second. You have to still use these percentages. So those are things you can write off. Now, if you paint that room, expand that room, repair that room, put new windows in that room, that's 100% write-off, not just the 10% for that space. So you can write off 100% of improvements to that area as long as they're specific to that area. If you're doing a whole home remodel, and you're like, oh, I'll just write off 10% of this whole remodel, that's going to throw up some red flags, and I don't recommend, because it's not correct. It has to be specific to that space. I have a couple other notes about that that we'll get to. I just want to make sure I'm not leaving anything out. Yes, so those are all home office expenses. And if you have office expenses, papers, pens, clipboards, microphones that you do podcasting from, anything like that that you're doing for your business from that home office is also 100% write-off. So this is where it gets tricky on tracking, because how do you know which one is 100% and which one is the 10%, and how do you record that? The best way to record it is to have your business reimburse you for the expenses that are from your personal home. That would look like writing yourself a check or transferring the money that's equal to that 10% amount that you paid. So you would look at your utility bill and you say, okay, my electricity was $200 last month. I can write off $20 of that from my business. My business is going to write me a check for $20, and I'm going to record it under home office utilities for $20. Now it's on my P&L. I've recouped my money. I'm not paying taxes on that money. I'm lowering my corporation's or my business's taxable liability by taking this expense. I'm in compliance with how I should be recording it. And that's the best way to do it. Now, if it's 100% write-off situation, still the same thing. You record the check, but you don't deduct it by the amount. You deduct the full amount that you paid. All of this insinuates that you've already paid out of your personal accounts for these transactions. You're not paying for them through the business account. So the second way to record this is to pay from the business account, and make sure that you then categorize the 80% or the 90% that's not a write-off as a personal distribution. That is not the preferred way, especially if you're a corporation. You really don't want to be commingling business and personal, but that is the other way, or the alternative way to record home office expenses, is to separate the distribution or the owner's draw from the whole transaction instead of reimbursing yourself. So speaking of reimbursing yourself, if you are an S Corp, you have to have the accountable plan in place in order to legitimately pay yourself back from your business account to your personal account for these expenses. Going back to commingling, you can't just take money out of your business account as a corporation, S Corp or C Corp. It has to be documented of when these scenarios would apply, how much is there a cap, are there people that it applies to or doesn't apply to if there's multiple officers in the corporation. All of that needs to be documented so that it doesn't look like you're just taking distributions, because you can take distributions from your business account, but you're going to pay those your payroll taxes on them versus not having to pay any taxes for these legitimate reimbursements. So my suggestion would be to create on your chart of account a section called accountable plan reimbursement expenses. And then under that, you then have your sub accounts of home office utilities, home office expenses, home office rent, interest, insurance, all of those things. So that it's very clear if you ever are asked to produce information about these expenses, that you have the accountable plan in place and they were legitimate reimbursements that you don't have to pay taxes on. It's a great strategy for lowering your taxable liability and keeping more of your money in your pocket without having to pay taxes, because you're paying more money for things you're already doing. You're not paying more money, you're paying the same money, but getting less taxes on them. So the other expenses area is for both sole prop, single member LLC, and corporations, including LLCs taking the S Corp election. It's at the very bottom. You'll see it once you open these accounts, you'll see it at the bottom of your financials instead of in the middle. So let's move on to disallowed expenses, because I see a lot of times people trying to write off things that they can't write off. And that's where I have more of my notes. I'm going to bring them over here. Writing off your kitchen table, your couch, your guest room. These are not allowed because they are not, the exclusive use for business doesn't apply to any of those spaces. So you really have to understand that that one room is just for business. 100% of your cell phone bill and your internet bill. A lot of people try to throw their whole entire bill into their write-offs. Now, technically, that's because your business, you put your cell phone on your business plan, but it's for mom, dad, kid, Susie, Joe, your aunt, your uncle, your nephew, whoever you have on your cell phone plan. So the proper way to record a cell phone plan would be to figure out what your personal phone costs on your bill. And now I know with taxes and fees and things, it fluctuates. This is where the accountable plan comes in really handy if you're an S Corp elect or S Corp proper, because you can designate a dollar amount. I'm going to designate that $50 a month of my Verizon cell phone plan is my phone, as an officer, and therefore the business is going to reimburse me $50 for that plan. Then you're paying your cell phone bill out of your personal account, but you're getting back that much money for your own phone. Now, if you're not doing that and you already have all of your cell phone bill going through your business and there's more than one line on it, the way to do that is to then cut it in half or cut it in thirds or whatever that is. And that's an owner's draw for the parts that are not your phone or your spouse's phone if you're both officers, and it's your business write-off for the rest. So making sure that you're not just sticking, I mean, I had one customer have a $600 a month cell phone bill. And because he had so many phones on his account, his personal line was only $50, but he was trying to take a $600 a month deduction. So that's the type of stuff that will throw up red flags, because nobody's phone actually costs that much money per line. It costs it in total, and the IRS is aware of that. So same with your internet. You can't write off 100% of your internet if it's a home internet, because it's servicing the entire home, not just your office. What you can't write off are roofs, windows, HVAC systems, whole house flooring, kitchen remodels. None of those apply because they're not exclusive to the use of your business. Again, you can only write off repairs and maintenance that apply to the room that you're in. Now, unless you also run your business, or you run your business from your front lawn, you also can't write off landscaping as a home office expense. If you have external building, such as like a shed or a little office on your property, which I've seen this many times, and there's like a little driveway that goes back to it, and you meet clients there, even though it's on your personal home, you can write off the cement driveway that you put in. You can write off security cameras that are watching that particular building. You can write off any landscape associated with the entrance to that for sure, because that is its own designated space for your business. Okay, food. This is always a big one. For food, it is not considered necessary to the operation of your business for you to have Starbucks in the morning. So you cannot write off coffee, snacks, lunches, things like that as home office meals, even if you have a particular stack of snackies that you use or that you eat during the day. That's just you feeding yourself. Every person has to feed themselves. They're not considered write-offs. So you already have to be careful of that with your business expenses, that you're not writing off all your meals, because again, they're not a write-off unless it's a client meal or an employee meal. But for home office, people also try to write off like, oh, well, I stocked my fridge with, these water bottles and these special drinks so I can have them because I work from home. That's just you deciding what you want to eat and drink. It's not a write-off. Audit magnet, honorable mentions, claiming home office when you have another fixed office where you do your admin work. So you have to make sure that when you're saying that you have a home office, it's your actual home office. It's not just a second office that you're trying to write off. Or if you do have a regular office, that is your primary location and your home office is secondary. It's not 100% for both places. Guessing square footage instead of measuring. Again, you should really have good numbers there. Deducting home office but clearly using it for personal space. There's a Peloton in there. There's a guest bedroom in there. There's a homework station in there. You really want to make sure that that space is just for business. And then we can talk about audits. I have seen twice home office expenses be denied in an audit because there was zero proof. And again, the auditor did not come to this person's house, so he didn't physically see it, but there was zero proof associated with the numbers that were recorded. So just like anything else, make sure you're documenting, keep your records. If you are reimbursing yourself and you only are paying yourself back that 10 or 20%, it's a great idea to put last month's utility bill on in QuickBooks as the backup of where you came up with $39.27 to reimburse yourself for, because you'll see then this was the whole charge. I'm using 10%. That was 10% of that number. So it's always a good idea, in my opinion, to attach all the documentation you possibly can. If you're not going to attach it, keep it. It is necessary to prove the basis of your information when you're audited. So one more thing I can just think of that is not a home office write-off is clothes and makeup. We all have to get dressed every day. Now, if you have uniforms specific, or if you're giving things out, or you have people coming to your house, so you have a specific outfit that you wear, those are different categories of write-offs, but not for your home office. So those are my notes and what I want to take you through today. Since I have several of you here, does anybody have any questions I can answer for you live? You can either put them in the chat, you can unmute yourself and ask. I'm happy to answer those.
I'll go first.
Great.
Talking about QuickBooks Online and the mileage. So in November, I did switch over to QuickBooks Online. However, I've been using MileIQ for 100 years.
Yeah.
Should I stop using that? I haven't done QuickBooks Online on my phone.
Mm-hmm.
So
So the mileage tracker, thanks for asking. That's a great question. The mileage tracker lives on your phone. So if you don't have it turned on, you're never going to know. It's not going to capture it for you. You have to physically go in and turn it on. The only difference really is that you're paying, I think it's $5.99 a month for MileIQ, where it's already included in your subscription for QuickBooks. But other than that, they're almost identical in how they function.
Is it a standalone app, or is it part of QuickBooks Online app?
It's part of QuickBooks Online app, but you'll have to go in to the computer first click on mileage, add your car, and then you should see it show up on your app as a mileage tracker.
Okay.
Yeah, great question. I love MileIQ. That's what we used to always use. And then when QuickBooks came out with their mileage, I mean, it just made sense to consolidate. But
well, it's
MileIQ,
only a matter of time before QuickBooks is going to start charging us for it. Like they do everything else. Oh, you're using that? Hold on, you love it? Wait, now it's $5.99 a month.
now is, yeah,
Um,
they're doing that to us now. They're charging us starting this year for the accountant version. It's been free forever, and this year we're gonna have to start paying for it if we want to do our jobs.
yeah, they're
So
not
you're not
dummies.
wrong.
Yeah, they're not dummies. They're a publicly traded corporation. They're gonna make money for their shareholders. Um, Mileage. So my home office, obviously, but I go to job sites, different job sites every single day. Each one of those is fully reimbursable, right?
Yes.
Okay.
Yep. The 72.5 cents per mile.
Okay. Good to know.
Yep.
I'm
Yeah.
done. Anybody else can go.
All right. Anybody else have questions about home office or mileage? No? Okay. Well, if you do, you know how to get a hold of us. Please do reach out. Sage, go ahead. I saw you.
I see you have a note taker on. Are you, I mean, I know you post this on YouTube also, but
Yep.
do you release the notes from this
Yes.
as well? That way we can refer to it, because otherwise I'll
Yeah.
just have to watch the video over again and
Over
take
and
my-
over. Yes, we actually turn these into blogs and put them on our website so that you have both versions available.
Okay, sounds good. Thank you, Sam.
Yeah, you're welcome. Thank you. Good to see you.
You too.
Thank you. All right,
Welcome back.
everybody. Thank you. I had an amazing trip. I had my first vacation in 10 years 2 weeks ago, and it was amazing. And she sent me the sweetest message saying, have a good time and your team's doing great. And it was really cool.
Where'd you
Yeah.
go?
New York and St. Lucia Island.
Oh, St. Lucia, the
I
pecans. I know the pecans.
It was like a real vacation.
I stayed at Danny Bonaducci's house in St. Lucia.
You did?
150 years ago. Yeah, he had
Oh.
yeah. Old
Wow.
girlfriend, different story, blah blah blah. But yeah, I remember the no-see-ums there very well.
Oh, nice. Yeah, I
Yeah.
loved it. It was a great time. But
Cool.
thanks for asking.
Good.
Anyway, that's it for me. We'll be back in 2 weeks on Thursday again, and we will see you there.
Thank you.
Great. Thank you. Thanks again, Sam. Appreciate it.
Yeah. Yep. Thank you.
Talk soon.
Bye-bye.
Yep. Bye-bye.